Good morning, you've tuned into ET Now and this is Buy Now, Sell Now with me, Karunya Rao and Varun Hiramat. The markets are looking very resilient. The way we started out was a tad bit lackluster, but after the MPC meet concluded and RBI Governor gave out a host of key announcements, the markets have reacted quite smartly, especially the banking and financial stocks. Right now, we're trading firmly above 11,900 for the Nifty with a gain of about 77 points. Sensex is up 300 points as we speak. Close to the 40,500 mark, very close actually. It could touch the 40,500 mark any time now. You have the banking index, which is Nifty Bank, up 2.2%. It has seen a very solid uptake after the MPC meet concluded. You also have the likes of PSU Banking Index, which is 1.4% higher. Private sector lenders definitely leading the pack today. HFCs have seen a very sharp uptake as well. As far as the flip side or the losers are concerned, you have some selling pressure in the Nifty FMCG Index, which is down about 0.5%. Nifty IT looking lackluster, and so is the Auto Index. Largely, the advanced decline ratio looks even, 25-25 each. You have the broader markets wherein the mid-cap index is gaining about 0.2%, small cap trading completely flat with a negative bias. Let's pull up some of these banking and financial names as well. From the banking index, all the constituents are in the green and very sharply gaining in trade. You have an ICICI Bank up 3%, Axis Bank up 2.5%, Bandhan Bank, HDFC Bank also gaining 2.5% each. RBL looking very firm as well, up 2.2%. SBI is also gaining more than 2%, and PNB up 1.5%. From the financial services, you have an HDFC Limited looking very buoyant, up 3.5%. M&M Financial up 3.2%. Bajaj Finance is up 1.7%. FinServ is also up almost in the same quantum. You have Chola Finance, Shriram Transport Finance, Kotak Bank, Piramal Enterprises. These are the names essentially from the banking and financial space that are buzzing away in trade. Let's pull up the BNSN stock cloud to just give you a flavor of all the other stocks as well to keep on your radar this morning. First up will be LIC Housing Finance, definitely an important one to watch out for in trade. Apart from that, you also have a Vedanta, all eyes on that. The premier explosives on the back of some bulk deal action. Dilip Lakhi has bought about 88,000 shares of the company. Solara Active looking a bit weak today in trade after some selling action seen there by big fund houses. JK Cement gave their update. They are also very much in focus and doing quite well. LVB is flying in trade on back of that clicks news. There's Dixon Technologies, 5 Paisa Capital, which are also buzzing in trade. And like I flagged off, HDFC and HDFC Bank, both looking very upbeat.
Okay, thanks for that, Karunya. The next stock in focus is Vedanta. There's a delisting currently underway. People are bidding in their shares. There's been a lot of talk of the real book value being adjusted for $40 oil in Vedanta being even higher than 180, 190 rupees. So many people hopped on this trade thinking that 175 rupees would be a reasonable outcome. But if you look at the price action, it's really spooked a lot of people, and it's firmly retraced from what we were seeing earlier on this week. But Mabina is going to join in now to walk us through what's happening, what's the latest with the number of shares being bid in, at what price, and how likely ultimately it is that you're going to get a good offer in Vedanta. Let's listen in.
Just one more day to go for Vedanta's delisting bidding period, wherein shareholders will be bidding in their shares. Up until now, the halfway mark has been crossed for Vedanta. Remember, they need 134 crore shares to be bidden for this delisting to go through. They have, however, received roughly about 73.8 crore shares by the end of yesterday. Interestingly, though, 35 crore shares have been bidden below 150 rupees per share. The balance, of course, above 150. And as the days have passed of this bidding period, the price band has been only going higher. That means shareholders are more and more shareholders seem to be bidding at the higher price bands. Largely the bids and one bid that's particularly interesting has come in at the price point of 160 rupees, where 17 crore shares, including those unconfirmed, have been bid in. Today, of course, is going to be very vital because we are going to be watching out for the institutional investor interest. How would the big names, LIC, ICICI, etc., bid, and at what price will they bid? Because that will determine what will be the reverse book building price that Vedanta will have to cough up.
Right, Mubina, the reverse book building coming to an end tomorrow. Let's see, but we all know for the promoter, even at 170, 180 rupees, if you look at all the brokerage in notes around it, it makes a lot of sense for everyone. So that's the optimism here that's being priced in, but let's see. I think we're just one day away from finally realizing what that price is. Just to remind you, a previous bid was made at 89 rupees, which was not well received. But coming back to Mubina, who's also been taking a closer look at Tanla Solutions because it's clocked some amazing growth in the first half of this year. The stock price has been 500% up this year, so nearly a 5x. There's been a lot happening with anti-spam for mobile, and that's really what's driving Tanla. But let's catch up with Mubina once again for more on this.
How many companies do you know of that have been earlier classified as penny stocks, available at just 2 to 3 rupees per share, to have rallied, risen from the ashes like a phoenix, and now trading at close to 300 rupees per share? I'm guessing very few, right? Well, one such stock is Tanla Solutions. This year itself, the stock has gone from 50 rupees per share to close to 280 odd rupees per share. Here's the story behind this company. It's into cloud communications. It provides messaging solutions. So when you shop online or when you conduct a net banking transaction, the OTP that you get is not given to you by, the telecom company, but by Tanla Solutions. So the key clientele of Tanla Solutions are your telecom companies like V, Bharti, Airtel. But interestingly, now Tanla is also foraying into mobile advertising. Both these segments are growing strongly because obviously in India, mobile penetration is still very low. So it's a very exciting business and industry to be in. Tanla has almost a monopoly in that entire OTB business bit. Though with this acquisition, there has been a steady surge in revenue and also its margin profile. The bottom line, there is a loss, but that's because of a surge in depreciation, which in turn was due to some changes in tech, cloudification of services that was brought about by a change in regulation in 2018. I want to talk about the hiccup that the company faced in 2008, roughly, when Nokia did face business trouble, the beginning of the previous decade, actually, and that's when the stock price fell, because Tanla too was deriving a majority of its revenues from Nokia. But since then, things have turned around, and how a new management has come in. You could compare Tanla Solutions to an Affle India, and we know very well how that company has done, the valuations that it trades at. And another boost of confidence comes in from the fact that the promoters as well have been lapping up shares. The stake has been increasing. They recently conducted a buyback, and I think that in itself should be a big vote of confidence.
Thanks for that, Mubina. Here's the story behind the rise of the stock price of Tanla Solutions. Meanwhile, let's get you an important commentary from a top voice of the market, asserting that the worst is behind us. Veteran banker Deepak Parekh said India's GDP growth will be in the positive territory in the fourth quarter as demand is picking up across the different sectors. Listen.
E-toll collections are back at 88% of pre-COVID levels. E-way bills are bills which reflect transportation of goods, has been increasing month on month. In August, we had 50 million of e-way bills. E-way bills have been generated compared to 53 pre-COVID. So we are almost more or less same to pre-COVID levels. We have seen a record high of number of digital transactions. We've never had the United Payments Interface, the UPI, set a record of 1.6 billion transactions of $3 trillion in 1 month, the August month.
Wow.
Even Google mobility trend, which maps mobility across different sectors like retail and grocery and pharmacy and transport hubs, workplaces, residential activities, all indicate activity is gradually nearing pre-COVID level. Consumption of energy, if you look at, consumption of electricity and refinery products, electricity improved to 98% to pre-COVID levels. So we have festivals now in October, November, December, the festive season. And Anand will talk about it, but I'll only say that the auto sector, the passenger vehicles, the two-wheelers, and tractors particularly have shown remarkable recovery. And residential sales for this quarter has gone up by 34%, and which shows that there is a pent-up demand, which shows also that people are wanting to buy ready-made apartments because there's a large stock of unsold apartments. And it also signifies that, during these 5 months of COVID, small families or large families are staying in small quarters. Now they want to move out and buy another house flat because today it's possible to get 70-80% of the cost as a loan. So there is a huge increase in residential sales, which we have noticed in August and September particularly. And not in Mumbai alone, but Bangalore, Hyderabad, Pune, amongst the major metropolitan cities. Agriculture has been a very promising story and is the most resilient sector. Food grain production will be all-time high this year.
Okay, that was obviously Deepak Parekh, a major authority on what's going on with the economy, and his analysis seems to be a lot better and optimistic than some of the other ones we've heard recently. But switching it up to another story that's also very relevant to the markets, something that Nayantara Rai, my colleague, actually broke and was forced to get to and has now been quoted by TechCrunch and a host of other notable publications. It's exclusive number 2 from her, by the way, on the Amazon versus Future Group story. ET now has learned that Amazon Future Group dispute is headed towards arbitration in Singapore. Amazon has already sent a legal notice to Future Group for violating the contract and entering into a deal with RIL. So Nayantara now joins us. Nayantara, yesterday you broke the story of Amazon sending a legal notice to Future Group for over 25,000 crore rupee deal with RIL. What's the news today?
Just 24 hours ago, we got to that big story of how Amazon has sent a legal notice to Kishore Biani's future coupons for the 25,000 crore rupee proposed deal with Mukesh Ambani's Reliance Industries. Today, we get to part 2 of the story, and this is again an ET Now exclusive. Where is this dispute headed? Well, it seems to Singapore via an arbitration. That's right, sources telling ET Now that Future Group as well as Amazon headed for an arbitration in Singapore. The contract that had been signed between the two parties had a dispute resolution mechanism that included courts, mediation and arbitration. It seems as if both the sides have agreed to an arbitration in Singapore. What is this going to mean for the timeline of Reliance Industries deal? Maybe that's why the markets were nervous, and you've actually seen the future retail stock today trade down. On a day, the bulls are all over the Lal Street. What's also crucial to note, of course, is that, as always, we wrote to all concerned parties a detailed questionnaire. Future Group still has not responded. Amazon has. Amazon has told ET Now, we have initiated steps to enforce our contractual rights. As the matter is sub judice, we cannot provide details, unquote. And the crux of the matter is Amazon, like we told you, convinced that the Future Group has not met its contractual obligations. And in fact, it is Amazon Global which is looking into all of this, not Amazon India. Amazon Global convinced it has the right of first refusal to the Biani family's balanced promoter stake as well as assets. On the flip side, the Future Group sources are telling me the right of first refusal for the shares only kicks in 2023. So all I can say till then is watch this space. We'll be getting you all the twists and turns.
Thanks for that, Nayantara. Future Group stocks continue to be very much under pressure. Slipping into a break right now. More on the other side. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. And as always, we've got you another quiz this morning on our Twitter handle, wherein we asked you which of the home improvement players delivered highest margins in the quarter gone by, which is Q1 of FY21. We gave you options: Asian Paints, Kansai Nerolac, Bajaj Paints and Pidilite Industries. And there you have it. The answer to this question is A, Asian Paints. Let's quickly announce the name of today's champions. C, Nalathambi is the follower of our Twitter handle who has correctly answered that question and becomes the champion of the NSN Daily Quiz. Thank you so much for everybody else for participating.
Yeah, let me just reiterate the big thank you that Karanya said. We encourage all of you to keep participating in our daily quiz question and testing your own knowledge on the market. Mubina caught up on TMS earlier with Rajesh Cheruvu, who's the CIO at Validus Wealth. It seems that SEBI has tightened the rules on inter-scheme transfers in mutual fund schemes. The regulator said inter-scheme transfers for managing liquidity should only be taken after all other avenues, including using cash, market borrowing and selling securities in the market for raising liquidity, have been attempted and then exhausted. Let's listen in.
So whenever there is a redemption pressure come in pure play funds, there is a tendency of the managers, there is a tendency of the sponsors or trustees or the fund managers to shift those allocations into these kind of blended funds, hybrid funds. There is no clear-cut ownership, there is no clear-cut debt is being managed by debt manager and equity is being managed by equity manager. So that's where I think whenever there is a redemption pressure is coming in, those allocations tend to be shifted to these places. And that is, we have seen that in most recently, especially when debt funds, in the last 6 months, the kind of redemption pressure we have seen, a couple of debt funds, those instances, couple of funds have actually adopted to this kind of practice. So that has led to a certain amount of compliance and regulators were not comfortable with this kind of approach. So all this is, I think, possibly would bring in further hygiene in managing the funds, and so there will not be any unrelated or unrelated securities coming into my portfolio, which actually is not the mandate, which might not be to the mandate of the investor which he has invested for.
Moving on, Times Network is always putting your interests first, and in this pandemic we understand that your personal finances might have been impacted. So we've started a special investor education series that will guide you in growing your financial portfolio, which is called Nivesh Ke Fande. Let's take a look at what we're covering in it today.
You know, Aisha, I was having a chat with experts on how can everyday investors manage the chop and churn or ups and downs, or perhaps peak and troughs, bottom line, the volatility in equity markets.
Yes, I can imagine a lot of investors having that concern. So how should one manage the volatility?
Well, it's quite simple. Think long term, be patient, and invest via the SIP route in a mutual fund.
You're right, consistency is the key. In the long term, regular investing really pays off very well, as power of compounding plays a very important role.
Yes, the power of compounding, it is truly magical. What it does, that it really creates wealth in the long term for a patient equity investor.
Yes, Nikunj. After all, equity markets are volatile by nature, and it's this nature of equity markets that actually makes them a source of long-term wealth creation.
And also, Aisha, remember, if you are investing regularly, you are able to bring the rupee cost averaging down, which is, there are days you will invest when markets are high. Also, there are days you would invest when markets are low. But in the long term, it will really average out and it will do wonders for your long-term portfolio.
Yes, and over time the investor ends up benefiting by getting the investments at the average cost of all the SIPs done, thus not having to worry about timing the market at all.
After all, time in the market is more important than timing the market. Hope this edition of Nivesh Ke Fande has helped you gain some insights on how you should go about planning your financial future.
That was quite an interesting package, but switching gears, supported by the growing demand for personal vehicles, passenger vehicle retail sales in September increased by 9.81% as compared to the same month last year. With no more lockdowns, the FADA anticipates a high growth period during October and November for automobile sales in India. Tractor sales too have jumped by a whopping 80%. So, is the auto sector really ready to rally and get out of the woods? We have probably the best voice to speak and analyze this, Pavan Goenka. Let's listen in.
All the indications that I see, everything that I read or any informal talk that I have, tells me that there will not be a flurry of discounts this festive season. It will be about what you see every festive season because of the demand being structurally there, it appears, and also because supplies are limited. In fact, when you ask me what will be the kind of growth, my view even now is that it will not be determined so much by demand. It will be determined more by supply. And supply, as you know, has been a constraint for the industry for last several months. We have been talking about that as our main constraint. But even that is improving significantly. From the month of August to September, there was a very big improvement in supply consistency. In September to October, I expect to get similar improvement. And I would think that by end of October, we should be more or less normal in terms of supply. All the concerns that we had about migrant labor not coming back, about working capital not being available for tier 2, tier 3 supplier, all of that has been taken care of. It's partly by government action, partly by action of the industry players themselves. But all of that has been taken care of, and it's a good sign that migrant labor also is back. I think that was one of the big concerns that everybody had, that will the migrant labor come back? They've come back. Yes, there was a problem because very often the labor that went didn't come back. It sort of got redistributed, and therefore many of the tier 2, tier 3 suppliers especially had to retrain, reskill the workers that came back. But numbers are there, and by end of this month, I think we'll be back to pretty much good level of resourcing at all the factories with.
With that, we'll wrap it up right here on Buy Now, Sell Now. Thank you so much for tuning in.